With April 15th fast approaching, you may find yourself unable to complete your tax return or unable to pay the tax due. If you are unable to file your tax return, you may file an extension. This allows you to delay filing your tax return up until October 15th. This does not delay the tax that is due, however. When filing an extension, you are expected to estimate your tax liability and pay that tax with your extension. It does not make sense to delay filing your tax return just because you owe money. You will be subject to a late filing penalty if you do not file the return by April 15th. The late filing penalty is 5% per month or part of a month of the tax due for a maximum of a 25% penalty. By filing your return on or before April 15th, you can avoid the late filing penalty. If you cannot pay the tax due in full, you will be subject to the late payment penalty, but not the late filing penalty. The late payment penalty is 0.5% for each month or part of a month that the balance remains outstanding. It increases to 1% 10 days after a levy notice is issued. If an installment agreement is set up, the 0.5% drops to 0.25%. Additionally, you are subject to interest on the outstanding balance. The interest rate is calculated every 3 months and based on the short-term Treasury rate plus 3%. If you cannot pay the tax in full, you have two choices. If you file the tax return without full payment, you will receive a bill in about 6 weeks. Pay that bill in full at that time and the accumulation of penalties and interest will stop. If you cannot pay the tax in full, you should set up an installment agreement. File Form 9468 with the IRS indicating the minimum payment you want to make and the date you agree to make that payment by. IRS will charge you a $105 user fee for setting up an installment agreement. The balance needs to be paid within 36 months. You can elect to pay more than the minimum payment or full pay the balance at any time to stop the accumulation of penalties and interest. If you cannot full pay the balance within 36 months, IRS does have the option of allowing you to pay over 5 years or to put you in an uncollectible status for a year. You will need to provide income and living expense numbers to show that you cannot pay under the normal installment agreement terms. New York State has the same options of allowing you to pay the outstanding balance over 36 months. You will need to call New York State to set up this option. They do not have a form to file. The worst thing you can do is ignore the situation. IRS, New York State, and most other states will work with you if you keep in contact with them. If you get a letter, respond to it immediately. If you need help in dealing with the IRS, New York State, or other states, please call Gerri Harrison at Gerri Harrison Financial Services for an appointment today at 729-4144.